Hi, everybody. My name is Randy Tate. I'm the CEO and one of the co-founders of Flip Investor Incorporated, otherwise known as iFlip. Today, our intention is to introduce you to the next generation of trading, information, and tools, and show you how technology is changing the landscape of investing. iFlip, the financial learning information platform, is the first true AI-driven investment platform available to the retail investor. And at iFlip, we have one simple purpose. You can easily read it right there: to empower every individual to preserve, protect, and grow their wealth. And we've done that by becoming the most efficient and most effective mechanism to the average person, allowing them to participate in the markets with the effectiveness of an institution. We've also turned our technology onto the crypto world. And later today, I'm going to show you how these two worlds can actually intersect and work together, and the AI can navigate those waters perfectly. We live in a world that's been drastically improved through predictive intelligence and automation, and the stock market and the crypto world are next. So we began this company with a vision and an intention to disrupt. And to do this, we knew that we had to do four things inside of our platform. Number one, outperform the market. If we can do that, that alone would be enough to have a really good story and technology we could sell. But we didn't want to stop there. We didn't just want to be better. We want to be easier. We want a very simple user interface so that people that don't have a lot of technology skills can still get in and use it. They can actually participate by letting the software do the work for them. Now, what else does that mean? Everyone says, how'd your software perform? That's the wrong question. It's not just about better. It's also about risk. We wanted to have a less riskier proposition for our customers. We want to do it with less risk. We want to be able to be better while risking less. And then lastly, we wanted to cost less. By costing less, we give everybody access. And we started some very low prices. You'll see that a little later on in the presentation. But if you can do all four of these things, you can truly create a disruptive technology, no matter what industry we're talking about. So everything you hear me talk about from here on out is going to be pointed to: we're better, we're easier, we're less risky, and we're less expensive. So when we set out to do that, we wanted to solve a few problems like everybody else. We've been conditioned as a society that 9% historical return of the market just happens. Everybody gets a 9% return. You go to your local money manager, your financial advisor, and they tell you 9% is great. You should be happy with 9. You get 9, awesome, 9. But we've been conditioned to believe that happens without risk. That's not the case. It's actually quite risky. And if you're watching this now, middle of 2022, you're finding that out. We also accept the fact that advisory fees are just complicated. We just pay them. We can't figure them out. And we don't even pay attention. If you've seen some of my other presentations where we talk about the hidden fees of mutual funds, you'd see there's a lot of fees in there. It's much more expensive, but we can't figure it out, so we just pay. The younger generation doesn't deal well with those two things. So what have they done? Well, they've taken to trading on their own. Free apps like Robinhood are everywhere. They're trading, buying, selling. They're on Reddit. They're, meme stock this, who's doing that? And they're all over the place. Well, they don't really know what to buy or how to buy. And that's also starting to show in the markets. And the other thing we do is we just switch. Well, I'm just going to get in crypto. That's the ultimate hedge. We've all been conditioned to believe that. Not true. We find a lot of people that have big brokerage accounts won't set up their crypto accounts because they don't want to set up an exchange or get a crypto key. And what do you mean wallet? You mean the leather thing in my pocket? No. It's not what we're talking about. Those are problems that the average investor incurs. And for you sophisticated people out there who you're laughing at me right now going, yeah, Randy, we all know that. That's common. That's why we do this. Well, you guys have some problems too. First of all, your data. Where does your data come from? Is it coming fast enough? Is it accurate? How much time does it take for you to trade? If you're a professional trader, you're actually grinding, you're reading the charts, you're building it out, you're creating your own algorithms. And guess what? If it hits to trade, you got to trade, buy, sell, whatever. You got to be there to do it. It takes your time. It's also emotionally driven. The very best traders in the world, every one of them, will tell you at some point in time they've made a trade based on emotion. All of their indicators said, don't do it, don't buy it, don't sell it, hold it, whatever. And they did it anyways, because it just, their gut told them to. So those are real problems. And lastly, there's a segment of our society that trades strictly for income. They're trading every day. They're making good money doing it. They're trading, but they're not investing. So for those types of people, they need a place to invest money that's more slow, less risk, and grows over time. On the crypto side of the house, just the ability to identify an anomaly. And if you don't know what that means, then it doesn't apply to you. But if you're a crypto trader, you know how difficult it is to find the anomalies inside the charts. The multiple platform inconvenience is a problem. Fees can be very expensive. Some places charge as much as 1% of the actual trade for you to execute the trade. And then every exchange is not created equal. They're not the same. Some have one price, while others might have another. So these are the problems we set out to solve. Remember, we're doing something that's better, easier, less expensive, super easy to use. Now, let's take an example. Institutions and advisors, right? They say the cost of missing the market's best days is extremely high, and that is accurate. You know, and what we're going to do now is I'm going to look at an example of how we help the average Joe, right? So if their solution says, write it out, you've probably heard this. If you're invested right now and you've had a conversation with your advisor, they've told you to hold pat, write it out. The markets always recover. You just got to ride out the wave. What they don't tell you is there's a whole lot more to this story. To help investors manage market volatility, conventional wisdom of firms is to recommend a traditional asset allocation. The thinking goes, a buy and hold approach will help investors accomplish their long-term goals. But for it to work, they have to stay invested all the time, including during severe market declines, like we're in the middle of right now. So we're going to talk about what the rest of that story is. And the rest of that story boils down to this: risk less. Risking less and missing the bottom is more important than catching the top. What does that mean? Well, let me show you. Let's take $1 million, buy and hold. We follow our advisor's advice. We put it into the funds they tell us, we stick it in, and we leave it there for 20 years. Go all the way back to 1998. That $1 million, if you did that, you followed that advice, you'd now have over $5 million. That's good. However, if you tried to time the market, you tried to pull your money out and put it back in to skip bad times, or because you thought something was going wrong, or you had an emotional opinion, if that's what you're thinking and you happen to miss only the best 10 days of the market, those are the only 10 days you miss. You hit every other day. You think the market's at its peak, so you sell, and you miss the 10 best days over a 20-year period. 10 days over 20 years. If you miss those days, your investment would now only be worth $2.5 million. So you'd have lost 50% of your money by being out for 10 days. So their argument has water, except they don't also tell you this. If you also missed the 10 worst days, along with missing the 10 best days, you missed the 10 worst days. If you invested that same million in the S&P 500 20 years ago and also avoided the 10 worst days, your account would be almost 11 million, 10.7. So buy and hold, 5 million, missed the best 10 days, 2.5 million. However, missed the 10 best days and the 10 worst days, 10.7 million. What does that look like on a chart? For those of you that are more graphically oriented, it looks like this. What you're seeing right there, blue, purple line there, that's if you miss both, 10.7. Black, buy and hold, don't touch it, 5. Try and touch it and miss the 10 best days, you're down to 2.5. This works in all investment forms: real estate, cryptos, bonds, hedge funds, any other investment tied to the US stock market, which, by the way, is most of them. So which one now is more important, missing the 10 best days or being invested all the single time? That's what you got to figure out. All right. So how do we do it? Let's talk about us a little bit more. I like to talk about us. So how do we do this? Well, a lot of people think we're an algorithm or a bot. You're a robot. Randy, there's bots everywhere. Everybody's got them. Every fund has them everywhere. What are you talking about AI? Well, let's break this down first and understand what an algorithm is. An algorithm is simply a process or a set of rules that's followed mainly by a calculator. I mean, a computer usually. It's a bunch of statements that say, if this, do that. So if Apple goes up 10%, buy it. If it goes down 10%, sell it. That's a simple algorithm. It's fixed. It's finite. For that algorithm to change, a human, those people that have emotions, all of us, not Vulcans, humans, have to go in and change it. That means, oh, well, it'd be better if Apple's at 9% now. So they have to go in, change the code, change the algorithm. So now it's going to continue to operate at 9%. That's what an algorithm is. Very good, very effective, saves time, energy, and money. However, artificial intelligence is something completely different. Artificial intelligence is an algorithm. However, it's an algorithm that has the ability to change its own rules. What do you mean, Randy? Change its own rules? Well, remember we talked about a regular algorithm, the way it works. A human has to go in and change the rules for it to do something different. Otherwise, it's fixed. Artificial intelligence has a bunch of other algorithms giving it data, lots and lots of data. Based on that data, on a regular predetermined basis, it resets its own rules. That's what machine learning does. So as the machine learns, it gets smarter and more predictive over time. So when people tell you that you can't predict the market, you can't time the market, that's a myth. You actually can. Now, can I time it every day like picking a racehorse? No, but I can time it in a manner that gets me ahead of it so that I know 30 to 40 days from now, the decisions the AI is making has my best interest in heart over that time frame. I'm going to show you some specific examples of that in a minute. Now, before I go on and show you those examples, though, let me tell you a little bit about the author. This is our co-founder, our CIO, Kelly Korshak. Kelly Korshak is the development person behind the AI. He's a pretty smart guy. Went to Stanford when he was 16, by the way. Graduated with degrees in statistics, mathematics, and finance, and has managed money for some of the largest institutions on Wall Street and in London. He's worked for places like Deutsche Bank, where he ran the risk desk, managing, I think it was about $6 billion. And he's done that with mathematics. He's worked with the Tudor Group. He worked at Morgan Stanley. He basically writes mathematics that can predict what's going to happen in the future. And that's what he's done. And so when we take that math and we say, okay, what's he done? How's it work? How's this guy Kelly actually done? Well, let's look at it. And remember what we talk about, risk. We talk about risk. It's important you guys get that. If you go back to the market losses, you take the last, was this one, 7 crashes, 1, 2, 3, 4, 5, 8 crashes, and you look at what's happened. All the ones before September 2018, they're back tested. But those two over there that are circled, the trade war at the end of 2018 and the COVID, those are real. Those are real results with real money being traded on the platform. And if you look, at the end of 2018, market went down 20%. Our drawdown, 3. You look at COVID, market was down 35. Our drawdown, 9. I'm going to show you what's happened right now in 2022. I'm going to have another bar to put up here when this one comes out of it. But the idea is to risk less. And if you could look back to like 2007, many of you would have been very happy to lose 12% if you're watching this. We talk about risking less, risking less, risking less. So when we look at this, what we're looking at here is the S&P 500. This is just 2022, just raw performance. The orange line is the AI. The blue line is buying and holding. You can see the long periods of flat. That means we're out of the market. Tried to get in, didn't do so well, got back out. And if you look at the way it sits right here, we're down about 3.5%, while the market's down 15, 18. I don't know what it did today, but it's right in that range. So just on the S&P 500, not on a full smart folio, which I'm going to talk more about, but just on the S&P, we're beating it significantly. Why? We're risking less. We're missing those worst days. Now, remember I mentioned to you guys, we also do crypto. We're starting to get into the crypto world. Well, one of the things we do that's extremely unique, I'm excited to share this with you, is trading combined smart folios, letting the AI trade. As you can see up here, it's got the S&P, the spider, Apple, Bitcoin, and Ethereum. These are all in a single smart folio. No wallet to set up, no exchanges, no crypto keys, all done on the back end by the AI. But this is a buy and hold in red and the AI trading in blue. And you see what happens when the combination of all of those are in place. If you take this all the way back to even before some of these cryptos existed, you see what starts to happen over time. Every time there's a big drawdown, like right here, and right now what's currently going on, the AI starts to separate itself. In a simpler graph over long periods of time, and we talk about the risk reward, again with the S&P 500, I showed you this year, I showed you a little bit right up there. Let's run that thing all the way back to 2017, see what happens. You notice that every time there's a major downturn, the software is out while the market goes down, creating separation. Randy, what's it doing when it's out of the market? Well, we think of cash as a position. It's in cash, waiting to go back in. And as soon as the AI says it can go back in, it immediately goes back in for you, fully automatic. That's pretty cool. So the bottom line is this. We set out to build a platform that was better, easier to use, exposes you to less risk, and costs you less money. So when we think about the benchmark of the S&P 500 and some of the main cryptos and what we're doing, our performance is quite spectacular. We like to think of the solution as this. Our software with equities, crypto, ETFs, you can do them individually, you can do them combined, you can even make them custom. Automatic protection from the market crashes. That's what the AI does. On the pricing, we charge a flat monthly subscription. I'll share that with you in a second as well. And on the easy side, there's nothing to set up. No wallet, no keys, no exchanges, just one single account, one single login. You can buy your cryptos mixed in with your, stocks, mixed in with your ETFs, or you can buy them individually. Completely up to you. We have built the world's first artificial intelligence investing app that empowers anyone to succeed like a professional investor. We've proven ourselves to be superior in performance and protection, allowing people to automatically get in and out of the market only when the times are most favorable for them. Last couple of slides here. Our interface, just a simple look at what the user interface is. This is the dashboard. This is the home screen. Shows you the value of the asset, of the account, how much of it's actually allocated. Well, only 30,000 of the 90 is in the market right now. That's interesting. Shows you the performance down here, up 4.3% for the year. It's not some kind of get rich tomorrow. You're not going to make hundreds of percent, but it's super easy to use. When you're ready to start trading, big orange button right up there on the top says start trading. Click that, off you go. It'll walk you right through it. And lastly, we charge a very small flat monthly fee, depending on the amount of money you have invested, starting at as little as $5 a month. It scales itself up from there, depending on what your goals are. But a big part of our unique value prop is the AI-driven automated trading. That's it. It's been designed to beat the market in risk and return and do it at a flat price. And so when you look at this, you're like, wow, that's pretty cheap. And if you were to go hire a professional financial advisor to actively and privately manage your money, you would be paying a lot more of this. And as your account kept growing and growing and growing on past 100 grand, it would continue to go up. We cap it right there, max out. And if you take advantage, when you get a hold of the person that either introduced this to you, or if you scan the barcode or the code I'm going to show you next, you'll be able to schedule a private demo. Go ahead and scan that QR code. You can get yourself a private demo, walk you through the entire software, help you get set up with a real human, a real person, then let the technology do the work. Whether you have $200 to invest or $2 million, we have a product that's right for you. Again, I'm Randy Tate, everybody. Thank you for taking the time to spend this 20 minutes with me, and look forward to talking to you soon. Thank you.